Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 22nd, 2026, and we're diving into the latest earnings report from Kearny Financial. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Kearny Financial's performance this quarter.
Let's get started with an overview of Kearny Financial. As the holding company of Kearny Bank, they have just released their second quarter fiscal 2026 results. John, what are the highlights from this report?
Kearny Financial reported a net income of $9.4 million, or 5 cents per diluted share, for the quarter ended December 31st, 2025. This is consistent with the previous quarter's earnings. Additionally, the company declared a quarterly cash dividend of 1 cents per share.
EPS forecast and analyst expectations. John, analysts were forecasting an EPS of 16 cents based on a survey of 2 analysts. However, Kearny Financial reported an EPS of 15 cents. How should investors interpret this slight miss?
While the EPS came in slightly below expectations, it's important to note that the company maintained its earnings level from the previous quarter. The consistency in earnings, coupled with a stable dividend payout, suggests a steady financial position. The declared dividend of 0.11 cents per share is a positive signal to investors about the company's confidence in its cash flow.
Revenue and profitability overview. Let's delve into the revenue and profitability aspects. Kearny Financial's net interest margin expanded to 2.14%, and their pre-tax, pre-provision net revenue increased to $12.3 million. What does this indicate about their financial health?
The expansion in net interest margin, up by 4 basis points, reflects effective management of interest-bearing liabilities and a reduction in borrowings. This improvement in margin, along with a 3.9% increase in pre-tax, pre-provision net revenue, underscores the strengthening of their core earnings. Additionally, the decrease in non-performing assets by 20.6% to $51.3 million highlights solid credit quality and risk management.
Operational efficiencies and strategic initiatives. John, Kearny Financial has been focusing on operational efficiencies and strategic initiatives. Can you elaborate on their recent efforts and how these are expected to impact future performance?
Absolutely. Kearny Financial has partnered with the Lab Consulting to identify automation and process improvement opportunities. This initiative aims to enhance operational efficiency and client experience. Additionally, they've added a 5-person residential lending team to boost their residential loans pipeline and diversify revenue streams. The strategic shift towards increasing commercial and industrial loans, along with home equity loans, while reducing multifamily mortgage loans, is a move to diversify their loan portfolio and mitigate risks.
Balance sheet and capital position. Turning to the balance sheet, Kearny Financial reported total assets of $7.62 billion, with a notable increase in deposits and a decrease in borrowings. How does this position them for future growth?
The increase in total deposits by $79.7 million provides additional funding capacity, which is crucial for reducing higher-cost wholesale borrowings. The decrease in borrowings by $111.5 million, primarily from reduced Federal Home Loan Bank advances, strengthens their balance sheet. With a tangible equity to tangible assets ratio of 8.56%, Kearny Financial is well capitalized, positioning them favorably for future growth and investment opportunities.
Key takeaways. In summary, Kearny Financial has demonstrated consistent earnings and strategic progress in their second quarter of fiscal 2026. With a stable net income, improved net interest margin, and a focus on operational efficiencies, they are well positioned for future growth. John, any final thoughts on their investment prospects?
Kearny Financial's strategic initiatives, and strong capital position make them an attractive option for investors seeking stability and growth potential. Their focus on diversifying revenue streams and improving operational efficiency is commendable.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kearny Financial's performance in the comments below.